G'day taxpayers. A few bits and bobs for the building blocks of the GDP figures which are out tomorrow. In no particular order, we had net exports plus 0.1 percentage point contribution to GDP. So neither here nor there really at the end of the day. I don't think anybody's going to be materially revising their outlook for GDP based on that number. More importantly, arguably, is the consolidation in fiscal policy that's coming through. Public sector demand in the June quarter rose by a big fat zero. No contribution at all. There was a bit of a pickup in public consumption, more or less offset by a decline in public investment. So that contribution to the economy that's been evident from the public sector over the last few years is continuing to wind back slowly, and really importantly, for bottom line monetary policy settings, we know that public sector demand is not influenced by interest rates. You know, interest rates could be up, down, left, right, whatever, and the government sector would still be building infrastructure. It would still be hiring carers, nurses and the like, regardless of interest rates. Which sector is influenced by interest rates? The private sector. And we know that private sector demand looks a little better, but it's still not blowing away the economy in terms of upside momentum. So again, to the extent that we've got a bit more of a preview of tomorrow's national accounts, the case is still stronger than strong that the RBA, when they deliberate at the end of this month, and after we see a GDP figure tomorrow, probably around about 0.6 quarter on quarter, 1.7 in annual terms, they'll be sort of saying, yeah, the economy's still a little bit subdued. Certainly the private sector's subdued. And because of that, we need to give more interest rate relief to get the private sector spending, investing, and continuing to hire to keep the unemployment rate nice and low.